Hey everyone, this is Chris Hadley with Fairway Independent Mortgage Corporation, and I wanted to take a deep dive into what's happening here at the end of 2021 and what leading real estate experts are projecting for 2022. I want to do that so you have the knowledge and confidence you need to succeed in the coming months. First, interest rates are rising, but are projected to stay low. One of the biggest drivers of the 2021's booming real estate market was record low mortgage rates. Because of this, affordability reached one of the highest levels it has in the last 30 years. The good news is, experts are predicting that mortgage rates will remain low for the foreseeable future. While home prices continue to appreciate across the country, more on that later, the counter of low mortgage rates means homes are still affordable to purchase, even though they're less than it was in the beginning of 2021. Home sales are slowing, but still strong. While experts are noticing home sales slightly slowing, that doesn't mean the market is slow. It's just returned to a more balanced market than we've seen in recent years. Home prices are appreciating a bit slower as well. The constant battle between high buyer demand and low inventory in 2021 led to a surge in home values that scared everyone that we were headed for another housing bubble. This year's home price appreciation resulted from simple economics: high buyer demand coupled with extremely low inventory or supply. As inventory starts to grow, experts anticipate price appreciation will slow as well. All this leads to the question everyone has on their minds: do all these signs point to a housing market crash? The answer, according to top real estate experts, is a big, resounding no. While memories of the housing crash of 2008 still linger in the minds of many buyers and sellers, today's market conditions resemble nothing close to what caused it in 2008. Home price appreciation may be high, but it's also a result of too many buyers and too few homes for sale. The forbearance situation should be balanced out by the large number of equity homeowners currently have. And what that means is they may choose to sell rather than let their home go to foreclosure. Plus, while affordability may be decreasing, historically speaking, it's still high compared to most other years. There's still a lot of motivation for buyers and sellers in the market, and that's not expected to change in the coming months. With both inventory and mortgage rates remaining low, both sides of the real estate transactions stand to benefit from making a move in the coming months. While real estate may be slowing slightly across the nation, it's still extremely strong. Waiting to purchase could mean losing out on a less competitive market and better affordability, the two big factors that positively impacting buyers and sellers today. So let's talk about the 2022 housing market. Here's what industry experts are saying about what they anticipate for the 2022 housing market. What does the future hold for home prices? That's the question on everyone's mind. It's important to remember that in 2021, the market was anything but normal, and that escalating home values directly resulted from record low inventory. However, experts project that the inventory situation should improve in the coming year, stabilizing price appreciation across the nation. But will home prices depreciate in 2022? Over 100 industry experts don't think so. Instead, they are projecting a more modest appreciation of about 5.82% in the next 12 months compared to 11.74% last year. The past year and a half saw the lowest mortgage rates in the history of real estate. So if you've been waiting for those rates to come back down or to go down even further, you're probably going to be waiting for quite some time, and it may never happen. What's important to know is that while homes right now may be less affordable than they were a year ago, they're still extremely affordable. If we look at the 30-year mortgage rate chronicled by Freddie Mac, we can see that by decade, in the 1970s, interest rates were about 8.86%, in the 80s, 12.7% on average, in the 90s, 8.12%, and in the 2000s, 6.29%, and 2010s, 4.09%. While experts don't project that mortgage rates will rise a huge amount, any increase would mean an increase in a monthly mortgage payment. A couple of decimal points may not seem like a lot to most people, but it could make or break someone's housing budget. So a rise in mortgage rates coupled with continued home price appreciation only means one thing: you're going to pay more in the future for the same house that you could buy today. So the good news is that many factors lead industry experts to anticipate a rise in homes for sale in the next year. Here's why. Homeowners may be more confident putting their homes on the market as COVID numbers stabilize and continue to drop and more people become vaccinated. Many of the obstacles that are halting or slowing new construction are starting to fade, and those homes will come on the market, adding new inventory and meeting population growth demands. As forbearance comes to a close, experts predict a wave of new homes coming to the market. However, they don't anticipate the majority of these homes going to foreclosure. Instead, because of built-up equity, homeowners in this position will have the opportunity to sell. While more inventory may take a bit of the edge off of today's competitive market, that doesn't mean prices will fall or homes will become more affordable. They'll be just more available to choose from. If you're new to buying a home, it's easy to feel overwhelmed by the road ahead. Yet, buying a home is possible when you follow the right professional guidance. As a loan originator, I've been empowering home buyers for over 26 years. Whether you have questions about your credit, a mortgage pre-approval, or how much money you need to get started, you can rely on a transparent, professional process and a solid plan to get you on your way that will set you up for long-term success. So reach out by phone, email, or visit teamhadley.com to learn more about what you can qualify for.